Ladies and gentlemen, good day and welcome to the Timken India Limited Q3 FY25 post-results conference call hosted by Batlivala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Annamalai Jayaraj from Batlivala & Karani Securities India Private Limited. Thank you and over to you, sir.
Thanks, Lizan. Welcome to Timken India Limited 3Q FY25 post-results conference call. From Timken India Limited management, we have with us today Mr. Sanjay Kaul, Chairman and Managing Director, and Mr. Avishkant Keshava, CFO and Whole-Time Director. I'll now hand over the call to the management for the opening remarks to be followed by question and answer session. Over to you, sir.
Thank you, Mr. Annamalai. Thank you, everybody, for joining the call. And I will not take too much in my own opening remarks. We'll jump into the question and answers quickly. But just to give a little bit of a pointer, the December quarter of Q3 24-25, we had the best ever December quarter ever in the history of Timken India Limited. So that was equal to 671 crore rupees, which was a 9.7% YOY growth to that quarter. And this quarter was our best ever quarter in terms of the third quarter. And so that was the highlight of it, driven by a moderate domestic demand. And a little bit of intercompany uptick, which is the export part of it. Subsequent sequential, if you take the previous quarter, we were down because of the cyclicity of the nature of the business. PBT margins of 14.6 compared to 14.9 in the prior year period. A resilient margin performance in the quarter despite a very unfavorable product mix. So that was offset a little bit by cost leverage. Compared to the last quarter, margin were down 1.8% due to adverse deleverage in the cost, maintaining a debt-free balance sheet with strong cash reserves, which obviously are enabling us to continue with strategic investment to drive the future growth. Short story on the Bharuch Greenfield project. The building is complete. Utility areas are complete. DG sets, power backups, 66 kVA line. Everything is ready. Admin building is currently, as we talk, is work in progress. All the machines are inside the building, and we are waiting for the HVAC to get connected. Work is in full swing on that. As soon as that gets connected, we'll start unboxing. It should be any day this week. So we have most of the assets are in place, supply chains are in place. So hopefully that should be now ready for production. So that is the short Q3 24-25 performance highlights. And now I would be open for questions and try to answer them.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Abhishek Jain from AlphaStreet Advisors Private Limited. Please go ahead.
Thanks for opportunity, sir. My first question on the segment-wise contribution in the third quarter, if you can give the number.
Yes, absolutely. So the segment-wise, do you want in percentage or in figures?
Yeah, if you can give in a figure, that will be great, sir.
Okay, in figures we can certainly give. And our rail in this Q3 24-25 was under 16 crore rupees. Mobile others was 139. Distribution was at 127. Process, which is stationary equipment, was 132. Export was at 152 point something, and there was a little bit of export incentive. But in terms of percentage also, total we did 671.4 crore. And in terms of percentage, rail was 17% of the pie. Mobile was 21% of the pie. Distribution was 19% of the pie. Process stationary equipment was 20% of the pie, and exports was 23%, and 1% was export incentives. That was the total summation of the breakup, Jansa.
So, sir, in this quarter, in a rail segment, we have seen a quarter-on-quarter improvement, and now the run rate has gone up to the 160 crores. And in fourth quarter, in last year, it was very high. So it was around 274 crores. So how can we see this growth will see a significant jump, and we can see some sort of the growth in the fourth quarter, or we'll see some impact because of the highways?
So all I can say is this question, I could not hear it very clearly. This is about pertaining to the rail third quarter and subsequent, what is the rail situation like? Is that right?
Yes, sir. Basically, in third quarter, we have seen a quarter-on-quarter improvement on the rail segment numbers, and even a Y-on-Y, there is a significant jump. But in fourth quarter, there was a very high base of around 274 crores. So, how do you see the fourth quarter number, and what is the outlook for the FY26 in the railway segment?
Okay, I got it now completely. Thank you very much. So, rail, as you rightly said, it was better than slightly better than the previous quarter. YTD, if you see the YTD 23-24 to current year YTD also, it is better. Last year, the last quarter, fiscal last quarter was certainly very good. And as you know better than me, that the last quarter, January, February, March, many times is very good, because people want to complete their orders. It is end of their own physical. They have to achieve their own targets. The order book for rail is okay now, depending on the customers, how much they want to invest. And generally, as you know, in India, last quarter would be always in the mode of completion of everything, not only rail, in general. So order book is okay. We are running rail all ships currently, and it is in full steam on production side. Now, how much customers would like to invert? Their own order book is pretty decent. Our order book is pretty good. So depending on all that, how much they would like to invert, because it is not only railways, they have to get the wheels, they have to get everything. If all comes together, I think it would be pretty good as well.
Okay, sir. Thank you, sir. And sir, in export numbers, till last 3 quarters, we are stagnant around 150 to 152 crores kind of the revenue on every quarter. So just wanted to understand how the export outlook in the near to medium terms, because we are hearing a lot of the challenge on the export market.
Yeah, if you see, our export was 23% of the pie in our this last third quarter, which was 152 crore rupees. And in the previous quarter, it was 20% of the pie at 124 crore rupees. So there is a small uptick in the export. As you know that there are Europe is struggling. America, there has been the change in the leadership there, and they might be looking to get their whole economic act in shape. Overall, it is not going to go bad for sure, that I can tell you. It could be flattish, uppish. Now, how uppish it can go, another 2-3 months will get more clear. But certainly, there is a slight uptake which I can see happening. In previous quarter to this quarter, our export grew by 24-20, quarter on quarter, 24-25 crore rupees. We can see that it is not going the other way. It is going the right way. Now, how much big it can go, as the economical policies start getting unleashed here. As you know that there is this Mexico thing happening. If there is tariffs, harsh tariffs on Mexico, tough tariffs on China, only time will say, initial news was 25, then they went into negotiation mode. China is only going to be 10. But all this, and hopefully nothing on India could be a great chance for India. But everything will be clear in next couple of months' time for sure. Market for export is not going down. It is flattish, uppish. Now, how uppish, only time will say.
Okay, sir. Thanks. That's all from my side.
Yeah, thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Mukesh Saraf from Avendus Spark. Please go ahead.
Yes, good evening, and thank you for the opportunity. My question is on the exports business itself. You did allude to change in leadership, change in government.
Can you speak a little away from the mic? Your voice is echoing.
Is it better now?
Much better. Thank you.
Okay. So, question on exports. Obviously, we are setting up this new plant, 600 crore capex. But if you could kind of give a sense on how the parent is now looking at new investments outside of the US, setting up new plants such as this, because obviously tariffs is something that you can't really predict. But is there a change in thought process at the parent level with respect to sourcing from low-cost geographies?
So for sure, as you are aware, Mukesh, about the change of leadership at Timken, and we have a very seasoned leader on board from ABB, where he was handling more than $10 billion worth of business, and in his time at leadership, I think he has done more than 24 of M&As as well. His knowledge of business in Asia is very good. I had many chances to speak to him. We visited our new plant recently as well, so a lot of what we call the windshield time when we are in the car discussing and all that. So for sure, from a seasoned business leader who comes with tons of experience, sourcing from best cost country is pretty much on top of his agenda. Now we want to be at the same time, I'm talking, the Timken company wants to be sure that they are near their customers, they do what their customers want. At the end of the day, they have to be cognizant of the fact that we have to be best in class in terms of cost, quality, delivery. So that plays a big role, especially in the passenger car, heavy truck, mobile. It is a world where every day cost improvement is the name of the game. He comes with a lot of great experience, a lot of great knowledge, and I think that the strategy to keep on sourcing from best cost countries is only going to become better and better. Having said that, they are not averse to the fact that how to serve the local market locally as well. And on top of that, this thought of doing a lot of work locally in order to grow locally, what if it needs investments or if it needs some other form of integration. So it is very much going to have more speed now. That is my 2 cents that,
sure.
that the engine of local for local and local for local plus global, and then integration on the drivetrain, which is what we do, would gather more momentum.
Got that. And secondly, obviously, you mentioned that the new plant in Bharuch is very close to starting operations. If you could give a sense that in the first year, say the coming year, F26, what kind of revenues we could target to achieve from this facility. Obviously, given the fact that exports is also one of the areas of targeting there that we were targeting there.
Yeah. So, more or less at a high level, factory is almost ready. I'm planning to make another batch on Wednesday. We have to just see when can we really inaugurate the plant to get the feel there. We should be able to start doing some kind of initial PPAPs by the end of the March, hopefully. That is the target. Now, coming to what kind of revenues we will get for next year, that is April to March of 26. I think that export definitely on this area is certainly going to be important, and then the Indian market is also part of the deal. We make SRB, CRB first time now in India. Exactly how much more sales we can do. The intent is that we should at least fill up the plant in the first year to 50 to 60% of the capacity. That would be a great win if we can utilize 60% of the capacity in the first year, 75 next year, and by third year we are fully capacity utilized. That would be the target. Market is very much there. We make great bearings, so the problem is not with the market. Problem would be how fast we can deliver to the market, and you have to go to the management change as soon as you change the plant, and all that takes time. The PPAPs take time and all that. Though we started assembling a little bit early in the day so that we can overcome the hump a little bit. But yes, Mukesh, we want to at least utilize 50 to 60% of the capacity of this new plant next fiscal.
Great. That's great. And just lastly, sir, what's your outlook on the CV industry, commercial vehicle industry in India, the coming year?
I think you need to tell me. Your take is better than my take. You please tell us. We will get ready accordingly.
It'd be good to hear your thoughts, sir.
So my thoughts are that now as you saw the budget, there is announcement of reduction of the spending. Though we did not spend what we should have, as Government of India could not spend what they should have spent. So if I say that we stay put on the infrastructure side of it, if we stay put on the infrastructure side of it, so the C market, construction equipment market would remain very buoyant. If we get a good monsoon, the tractor market is going to remain buoyant, and the tipper market is going to remain buoyant. We also see now there is a lot of activity, though small, in the kind of a defense arena. Now, whether our heavy truck is going to be having the traction which we want that to happen, 18 kind of stuff, I don't think it is better. It is going to be definitely better than the last year, but if it is going to boom, I cannot see that yet happening. Sure. But certainly, I think rest of the things will make it slightly better than the previous year. New things are happening on the bus side of it, so I will not discuss that. But overall, I think between construction equipment, off-highway, tractor, and the heavy truck with the tippers taking a lead, extra, we should be okay. But it won't be the commercial vehicle going to 500,000 units on its own this fiscal. Yeah, I need to say 25-26.
Got that, sir. Got that. Thank you so much for this, sir. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Viraj from SIMPL. Please go ahead.
Yeah, hi. Am I audible?
Yes, very much.
So just a couple of questions. First is on the railway part of the business. Can you just give some perspective? How's the demand environment? Where are you seeing attraction? And also some color on the competitive landscape in each of the segments?
Yeah. So I think the overall, I would say that if rail is going to be, it won't be a hockey stick, but it's going to be better compared to the previous CY. So rail will be better. For us, we are metro, passenger, and freight. We have started supplying to the local market, which we are not supplying on the electrical. So that is going to be small, but for us, that is a pretty good outlook. The wind is doing very well in Indian side of it. That is the Indian wind market, local, not the gearboxes, which the ZF and the Siemens, Nanjing High are producing and exporting. And that is also kind of okay. And the Indian market, where you have the Adanis of the world installing now, that is catching pretty good traction. So, 3 megawatt, 5 megawatt, those windmills, especially in the area of Kutch, etc., in Gujarat, that is having a very beautiful traction for sure. And the market of the gearboxes is also, though it is changing this profile, they are going to bigger and bigger megawatt. That is also okay. So this is on the okay side. Food and beverage is a small segment for us, very small, emerging, but it's going to be pretty good. Marine is a small segment for many of us. It is going to be good. It is going to be a focus area. What is not going to be great as we sit today and talk is the heavy truck. I don't think it is where I can start saying that, hey, we need to start investing to get more capacity or something like that. So that is not happening there. Construction equipment would be okay, depending on monsoon, tractor would be okay. But overall, I think with the GDP going at 6%, and we have demonstrated as a company that we have always grown more than the GDP, so that should be okay. My personal feeling is that the 25-26 exports would be better than 24-25. Now, how much better? Another 2-3 months next call we can give you more meat on that, but it is going to be better. How much better? I think by next quarter it will be very clear.
Okay. Second question is, the capex which we announced and we are looking to commercialize and scale up from 26. If you were to compare the portfolio of the parent and for us in India, listed entity in India, what further gaps or what further opportunities there could be in terms of localization, either from an import substitution or also from export play?
Yeah. So, I think that in India, the parent has many companies which have a lot of market in India. And those companies definitely have the supply chain potential out of India. To name, lubrication is one area, coupling is another area. Coupling is again same like steel, forging, turning, heat treat, grinding, finishing, etc. So it is very similar to bearing in some, if I generalize it. So the parent has the technology on the chains, on the couplings, on the lubrication system. I'm keeping belt out of my discussion. But in general, these industrial applications have great market in India and greater supply chain potential out of India. So so it is obviously always on the discussion. I can say that every day, every other day we think about it. There are discussions globally on it. So that area is very much available there. So that is one part of it. It is not we call industrial motion. Now coming to the bearings, we make taper roller bearings up to 24 inch in India. So there is very much a possibility that the market is there, especially the wind market, which goes up to 36 inch up to 48 inch. That means larger bearings can be made into India very easily, and now you have the market and the critical mass. So that is on the bearing side. On SRB, CRB, our current investment is up to 400 millimeter on SRB, 300 on CRB, but the market has potential to buy a localized bearing up to 1 meter. So easily up to 1.2 on a spherical, especially the cement market, and also some market of energy, the pulverizer that's also take larger bearing. So that we still import and sell in India. So they have a greater chance to be localized and also become part of a global supply chain to ship out of India. So those are the areas where we've been looking at the market, seeing how it is behaving, and now we see that the wind is getting bigger and bigger for those guys who are exporting the gearboxes. So those are the areas. Apart from that, there is another company which Timken has taken called GGB. This is a very specialized bearing company which does plain bearings. GGB already is in India, so they are not producing anything in India, but they are selling not a whole lot of sales, but I think 30, 40, 50 odd crore rupees they are doing. So they have the chance to produce in future. These are not only steel, these are FRP and other material. And these are used in all kind of application, in automotive, in construction equipment, in aircraft industry, and industrial application. So these are what we simplified call as self-lubricating plain bearing, pretty high-tech stuff. And that is already they have a wing in India. So we are looking at it. How do we take that is a low-hanging fruit? How do we take advantage? Customers are saying. They are already established in India, and how do we do that? So a lot of brainstorming and discussions happening on that. So if I have to say, largely there are three buckets where integration in future will happen. Now, when it will happen, only time will say, but industrial motion, which is all these couplings, chains and lubrication systems, plain bearings, and extension on the size ranges which we are already producing in India.
Thank you very much.
Thank you.
Thank you. The next question is from the line of Rishi Vora from Kotak Securities. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. It's just a follow-up on CRB, SRB, where you talked about reaching a 50% utilization levels in the first year. So roughly you are seeing, if I assume a 2x asset turns, you're roughly guiding for 600 crores of top line from year one. So can you talk us or help us understand, like, with which customers we have already engaged? Is there an order book over there? Which end consumer segments you will be targeting? And the first year is only going to be domestic, or we are also going to export?
So first of all, let me clarify, 600 crore is the investment, so not the sale. So we are going to try to utilize the capacity to the tune of 50% first year, which will be a great achievement. In the bearing industry, generally it takes 6 to 7 years to reach 85% of capacity utilization. So that is one. Second is that we are already importing and selling bearings in India of this range. So that is a localization target. But our major focus is actually new customers, both exports and domestic, more exports than domestic. So that is the end of the whole drawing board is to put up this size range. Major is to export out of India. And obviously, not only export, then what I'm importing into India would get replaced and get tooled up. And then new customers in India, new part numbers in India. Similarly, globally, what can be rationalized, not only rationalized, what can be taken as new customer. For example, Timken does not supply anything to the palm oil industry in Indonesia and Malaysia. It is a virgin market for us, has been dominated by our competitors. I'm not saying we will go after them, but just an example. That is a market. There is a huge crushing market where we don't supply much in India, but we got the best technology, and that is another area which is pretty much significant in India. So our target is going to be first year capacity utilization, whatever we can get for exports, whatever I can convert from exports to localization, and any new customers on it. So coming back to order book, yes, what I'm already selling in India, that I can convert to localization. And B is that we are already starting working with our end customers, all of them. You name the customer, we are already there, whether it is cement, whether it is steel aggregates, or it is material handling. So we are working with them. We are in touch with them. We are telling them our capability on this SRB, CRB. Everybody is excited. And similarly, globally, the sales people have been announced about the Bharuch plant, and they should get ready and start working on that. As you know, we are on SAP, and many things need to be done so that the demand flows towards this plant. So all that work is happening, and I hope that we hit 50% capacity utilization by the end of the year. It won't be day one. So we go gradually, step by step, and then 50 to 60, 70, and then on to 80, 85.
Understood, sir. And just in the previous, I think if I recall it correctly, the imports of this kind of bearings was around 50 to 100 crores, right? Is that number correct, or?
No, not more than that. We were doing that much.
Oh, sorry, you'll be doing that much only.
Yeah.
Okay.
Market is big.
Understood. Thank you.
Thank you, Rishi. Yes, any other question, please?
Thank you. The next question is on the line of Sabyasachi Mukherjee from Bajaj Finserv AMC. Please go ahead.
Yeah, hi. Am I audible?
Yes, very much. Sabyasachi, I am thinking of dresses, not bearings. Go ahead, please.
Sir, a couple of questions. First, clarification on the capacity utilization level that you are trying to achieve 50-60%. Is it the exit rate for FY26, or is it the average utilization level for the entire year?
No, as we start doing the PPAPs by the end of, there are different lines. So it will be step by step. So it won't be average. So I would be very happy if it is average. So it will be step by step, averagely less than 50-60% if you take the whole year average.
So basically, let's say by Q4 of FY26, next financial year, you are trying to achieve a capacity utilization of 50-60%. Is that understanding correct?
That is absolutely correct.
Okay. And secondly, on the railway side of things, this budget we have seen that the allocation to railway budget has been flattish year on year. Any concerns you foresee in this segment as far as demand is concerned?
I have been telling this for many years and many quarters that rail will be always better than the previous year, but it would be step by step. So I think even if it is flattish, is not a bad news at all, especially from the wagon passenger car side of it. So it is not bad news. It is always going to be step by step, because you need to have more tracks getting running. You need to phase out the old rolling stock. There is already high density. If you see from Delhi to Kanpur, every 2 minutes one train passing, and then you have the fast train going on it, and then you have Mal Gadi going on it. So the average speed will be what is the speed of the Mal Gadi. So all that put together, I don't think is a cause of concern. I think the order book is pretty okay in the wagon industry. It is pretty okayish in the rail passenger segment. Metro is small piece of it. It is that one is pretty good. And connected to metro is also a tunnel boring machine. That is another good bearing consuming area. And not a huge thing, but still nice. So to Sabyasachi, to your direct question, not a cause of concern. We'll be very happy if they double it. But still, I prefer it this way rather than going up and down, which is not great for the industry. Slow and steady rail is better for the industry, and it is going that way.
Got it. That's very clear.
If you see, there is not, even if they give more money to the budget, there is no wheel capacity in India. Now you know that people are putting the wheel plants extra side. That all will take time. So it would be like allocated unshipped. You give money, but it does not get consumed. Is no fun. So जो 1 लाख करोड़ कम गया, उसमें थोड़ा ये भी समझ लीजिए कम हुआ है. But I think it is good. We need to consume this what has been allocated, and people are putting one of the bottlenecks is certainly from the back end side of it is the wheel, which is getting no fun in exporting from China other places. So that is getting corrected. People are putting a wheel plants. I think three companies are already onto the job, so that is good news on the four-wheel side of it, and then on the track side of it, so that is also moving slowly. So yeah, not at all of concern as long as they keep on maintaining and moving up.
Understood. That's very clear, sir. Lastly, on exports environment, given the trade wars and tariffs at play, what has been your experience in probably last 1 or 2 months in your interaction with different clients as well as your parent? How should one think of the exports piece of our business going ahead?
So this is obviously seasoned companies like Timken do not take immediate action on anything. So our parents are watching the situation pretty well, and they are looking at it, and you can see the first reaction 25%, then negotiation, all that. So that is what we'll get a better feel in another 2-3 months time which way it is going to tariff for. But as you can see that Mr. Modi is in now en route to US, or must be already in US, and the balancing act is already being done. I think India has given signals like bringing down the duty on the Harleys, and they are sending positive signals because of the fact that if eventually there is going to be say 10% on Mexico, 10% extra on China, which for the automotive world means a lot. So So it is good news for companies in India, and we need to leverage that as a country. I think we have to wait another 2 months. No knee-jerk reaction from our parent as well. And we are also watching carefully. Let us see what happens after Mr. Modi comes back. What does he deliver or not deliver on this very, very crucial visit? I think overall my gut feel is, as I am also involved with the American Chamber of Commerce, it is going to be positive for India. So I think that would be good news. And then this aero show is on here in Bangalore, and this defense industry is going to be significantly big industry in 10 years' time. I think we can all see that the seeds are getting sown. Things are started happening, though small, but they are all coming together slowly.
Understood. Sir, lastly, if you can also share the segment-wise 9-month numbers, absolute value numbers for the 9 months.
Okay. So you want current year YTD?
Yes, sir.
So current year YTD, let me ask my CFO to give you percentage of the numbers. So my CFO is saying, please give the percentage. So here is the percentage. Rail is 21% of that. Mobile is 19. Distribution is 19. Process stationery is 20%. And then intercompany is 20%. And 1% is business is totally complete. And YTD current year we have done total 2,208 crores.
Got it. Understood. Thank you. That's all from my side. Thank you, sir.
Okay. Thank you, Sabiyasati. Thanks a lot.
Thank you. The next question is from the line of Harish Bihani from Kotak AMC. Please go ahead.
Yes, sir. So can you please help share what sales number will the new capacity do at full capacity?
So it is a beautiful question, Bihani sir, but it is very tough to answer because of the fact that I have no idea what is the product mix going to be. A bearing which is 100 millimeter versus a bearing which is 400 millimeter. So there is this big mix question. So give us another 3 months, then we can predict this better. Today it would be shooting in the dark. We got different ranges. There are different price points in the market, and we got 2 different kind of bearings. So we will have to wait a little bit for us to understand and digest the demand, and then we can be better qualified to answer this question.
But the range should be somewhere between 900 to 1,200 crores. That should be fine? Or too early to say?
So, at this stage, if you take the capex and multiply it by 1.5 or 2, might not be the right way to look at it. I have to capitalize each line, PPAP, each line, MOC, each line, customer inspection, each line. All this takes time, and every customer will go through the moves. These are big customers, international customers, so they want to check every piece of it, despite the fact that Timken is a 125-year-old company. So you can do this mathematics 3 years down the line, but not immediately.
Understood. And follow up on that is that the overall capitalization will happen through the year. So
Yes.
This 50% average utilization that you spoke about will not be at the full capacity, right?
No, the 50% average, 50% utilization, hopefully by the last quarter, 50 to 60, not average, as I said earlier as well.
Okay, so by a full year, the entire capitalization should happen, and then hopefully by then, at least 50% on average, we should be able to reach by the end of the year.
Correct. That's right.
Understood, sir. Understood. Thanks so much.
That's right.
All the best.
Thank you.
Thank you. The next question is from the line of Sushil Saha from Saha Securities. Please go ahead. Sorry to interrupt.
My question is, while taking up the...
Sorry to interrupt, Mr. Saha. Members of the management team, there's a slight disturbance from your line.
From our line?
Now
Yes,
am I audible, madam?
No, it's from the line of the management team, Mr. Saha.
Oh, we did nothing. Am I clear
Am I
now?
audible now?
Yes, sir. Please proceed.
Am I audible now?
Yes, Dada, you're audible. She has problem with our line, but I didn't touch the phone at all.
Sir, my question is, while taking up the expansion work in your new bearing plant, I mean to say, you had indicated the capex you incur. Normally, the top line will be around 3 times of the capex. That is 1,800 crores. So, sir, now you have told that we will be achieving almost 60% of the capacity next year. So, can we safely assume that 60% of 1,800 crores will be achieved next year?
I will try to explain one more time. We want to be at a capacity utilization of 50-60% by the end of the next physical year. So it will go through step-by-step process to reach that capacity utilization by the end of the next physical year.
So can I assume, sir, that next year, by the end of the next year, will be around 60% of 1,800 crores?
I am not saying anything. I am saying that our capacity utilization will start happening from April of 25, and by the March of 26, our capacity utilization should be around 50-60%. 60 would be great, 50 would be wonderful. So between 50-60%. So how much time it will take to bring the average? Obviously would be less than 50. Now how less? Depending on how fast we can have the PPAPs, audits, MOCs done, and then that can translate. Whether we can make smaller bearings where the value is less, whether we are able to first launch the larger bearing where the value is more. So you'll have to give us another 3 months to understand this little bit better as we unleash this product line out of the roof plant to the Indian market and export as well.
Okay. So we can assume that another 2 years down the line we'll be achieving that, sir, at least.
So our endeavor generally a bearing company will take 5, 6, 7 years to reach capacity utilization time. Now that we are an established player, we have a supply chain which is already available. We know the customers. I would say that 50, 60 by the end of next year, 70% 1 year down the line after that, and 85% by the end of 3 years would be a great achievement for us. And we are known to hit the targets.
Okay, thank you so much, sir. Actually, I am an investor. I have invested in your company since last 20 years. I have heavily invested in personal capacity in your company. Thank you very much, sir.
I must tell you, Sahada, that you have invested very well. If you are an investor for last 20 years, so then you have made good money out of Timken India Limited.
I have made good money, sir. Good money. 30 times I have made almost
good money. This company is a debt-free company. It is highly technology-driven. It is working more and more, and you'll see a lot of good things happening in the next 2-3 years. So stay connected, please.
I was in Tata Steel. I got share at 10 rupees.
Oh, you were working with Tata Steel?
I was working with Tata Steel when I got Timken share, and that was at 10 rupees face value.
10 rupees opened at 150 rupees.
I have made it almost 1,500 shares now. So I have quite...
Very nice.
Thank you so much. Thank you so much, and wish you all the best, sir.
Thank you. Thank you very much. And with that, I think, do we have any last questions?
Sure, sir. We take the last question. That is from the line of Shaukat Ali from Monarch PMS. Please go ahead.
Hi. Thank you for the opportunity, sir. Just one question left to be answered. So wanted some color from the process segment, how different industry has fared during the quarter. If you can give some color about different industry segments faring during the quarter, sir.
I would say that, the process industry for us, if you see, is comprising of all the stationary equipment in the project side. If I talk about processes, steel making, cement making, they buy bearings in MRO, that is distribution for us. When I talk process, this is going into the OE fit. That means somebody is making a steel mill, somebody is putting up a new cement plant, somebody is making stacker reclaimer, and somebody is doing some machine, paver laying machine and things like that. And obviously, wheel gearboxes is as well there. So if you see, Shogun Bhai, quarter-over-quarter, we were 130 crore previous quarter and current year quarter 132. So that tells you the story, and we have not lost penetration. So the traction is okay, but it is not, nobody is making a lot of steel. There is some expansion happening here and there, but all these mills, if they are coming from Danieli, SMS from abroad, so obviously somebody else is getting the sales somewhere else in Europe, etc. But this is going to be better in coming quarters for sure, as we see that there is a lot of traction out of East Africa, West Africa for getting more steel mills out of Indian smaller companies. So that is happening. Some of the other expansions which were done 2-3 years back, they are getting further, as you must be connected to the steel industry. So that is happening. So it was nothing which was really wonderful, great, and we are very buoyant about it, but it was not bad. We are not complaining. This is going to be better in this next physical for sure.
And how the wind segment is faring of late, sir? What is your view in the near-term outlook about the wind sector?
Wind is हवा का झोंका, कभी आया तो कभी चला गया.
Okay.
So that's exactly this wind saying. For example, China was down last year on wind, and then all of a sudden January they had a nice wind traction on it. Now in India, I see a wonderful emerging trend, that is the Indian companies putting up wind farms which are 3 megawatt and 5. India had some own wind, they were sub megawatt crap thing. So now the Adanis of the world and Suzlons of the world and similar companies are putting windmills in India. So that is going to be pretty good. And then we see Nanjing Hai is making gearboxes or assembling gearboxes in India. There is moving up they are making bigger and bigger gearboxes. So wind is a dicey, it is a dicey market. It goes up, it comes down, it goes up. But I think for us at Timken in India, wind market would be stable or better.
Got it. Thank you. Thank you, Prabhu.
Thank you very much. Thanks a lot, everybody. Thank you. Thank you, everybody. And if you have any good news about commercial vehicle, please give me a call. We want to learn more about what is happening in the CV world as you get connected to everybody. It will be good to get educated. Mukesh bhai, if you get anything special inside, give me a call. We want to know what are the trends happening in commercial vehicles, which we are not aware. So thank you. Good day. Bye-bye.
Thank you. Ladies and gentlemen, on behalf of Batlivala and Karani Securities India Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank